Hello, welcome back, guys. So, Snowflake is an IPO, a relatively recent IPO that Buffett actually bought, Warren Buffett, that is. And it's a little bit surprising. This company's financials are not pretty much aligning with what Buffett typically buys. And I wanted to make a video talk a little bit about why it's up 22% right now. This has to do with its earnings report, of course, and also whether it's an interesting opportunity, whether it's a good buy for us here. Now, remember that just because somebody buys a stock, even if they are a huge investor and one of the best ones in the world, like Warren Buffett is, they could still be making mistakes. For example, Warren Buffett has also bought Kraft Heinz, which hasn't been doing well. And he has himself told that he overpaid for at least some part of that company, pretty much, because it's like Kraft and Heinz. So, in terms of Snowflake, is this a good opportunity? I mean, it's been about $405 at some point, so it's still down a lot, and there is a lot of upside if we were to ever reach this price again. Now, we do want to examine the first thing that we do want to examine is what happened during the earnings report, and you will see that shares soar following revenue beat here is what happened. And so let's see here. The company did a loss of 70 cents. So the company is still losing money. This is a company that is still losing quite a lot of money here. It's not profitable yet. So it's a speculative investment. It's a very, very super risky one that could go well or could go badly. But if it does go well, then obviously there's a lot of upside, which is probably why Warren Buffett is spending some money on this one. Apart from the fact that he probably trusts the actual executives there, because that's one of the core reasons why Warren Buffett for sure would invest in such a company, such a speculative company that is. And this was one of the biggest IPOs, software IPOs really, and caused a lot of talk around the Wall Street really. And again, it ran up a lot and then went down. Now, revenues, 497 million versus 467 that was expected. So you can see this is a pretty handily beat here. And that actually really helped the company propel their actual stock price upwards. And see, this is a company that is growing their revenue at a tremendous rate, and this is what the Wall Street likes. And of course, they do like that. That's a very good news about the company for the company, and can actually really help them achieve profitability even faster than expected. Now, the company's revenue for the quarter grew 83% year over year, which is absolutely insane, as you can understand, and still a little bit lower than last quarter, pretty much, or year over year, but still amazing. 83% is absolutely insane. Largest part was product revenue that you see here. And Snowflake also said, in terms of guidance, it anticipates product revenue will be between 500 and 505 in its third quarter, and between 191 billion and 192 billion for the full year. Product gross profit margins, operating income margins, and adjusted free cash flow are expected to be 75%, 2% for the operating income margins, and 17% for the adjusted free cash flow is what they are expecting here. Okay, so Snowflake said it had 6,800 customers about in the quarter as well, which is a little bit more than the consensus estimates here. Very interesting to see. And we're going to take a little bit of a closer look here, which is what we typically do, in terms of the financials, like what is the company doing in terms of financials. Now, the company is not profitable, it's losing money, thus the PE ratio is negative. Again, too few years in terms of what we can actually say about the company's public years, pretty much, so there is a lot of growing to do, of course. But it is a company that is actually having a very high price to free cash flow ratio. Probably this is positive because of adjustments to free cash flow. We will examine that. But you can see the outstanding shares here that after the IPO, the company actually issued a ton, and that's obviously not a great thing to see. In terms of total liabilities to free cash flow, it's quite a lot as well. So the company seems to be having a little bit of extra total liabilities, or actually not having enough free cash flow is probably going to be the real reason behind this one. And the price to sales of 37 is actually super high as well, even though it used to be even higher. That's pretty high. In terms of revenue growth, this is where the company shines. You can see that they have been growing their revenues massively, and we're expecting them to be growing massively, continue growing massively. Although the net income growth has been going down because they have been losing more and more money. Free cash flow growth has been a little bit better, but it's probably because of adjustments, which we will examine, of course. And total equity growth has been increasing, but remember, a lot of outstanding shares here, a lot of extra shares being printed. Not too much debt it looks like the company has over here, But let's examine some finer details in their income statement, balance sheet, and cash flow statement. Yeah, the revenue has been absolutely insane here, like 100% increase every year, absolutely amazing is what they are doing there. But net income has been going negative. Now, this can happen for a little while and it may be still okay, but it's definitely problematic and can be a much riskier investment than a normal one, which is actually making money. So the good thing about the company is that they still increase their revenues at a tremendous pace. So this could be one of the reasons why their net income is actually suppressed, aiming for more growth. Now you will see here that the total equity of the company from minus 300 million to 5 billion here. That has a lot, of course, to do with additional paid-in capital, a lot of issued shares over here. That makes a ton of sense why this is the reason for their total equities that's so up. And 1.6 in total liabilities. Now, in terms of the cash flow statement, you'll kind of see the adjustments here because the net income has been negative, as we said, but the company has been paying employees with stock, and this is one of the reasons why they need a lot of stock, and they keep issuing shares, of course. They issued a lot also on the IPO days, and this is one of the reasons why you are looking at pretty much the free cash flow going into positive territory here. It's actually the most important reason. Some minor changes in working capital and other non-cash items, but for the most part, it's stock-based compensation that actually makes this value a positive number. So even though you are looking at a positive free cash flow here, practically speaking, the company still hasn't achieved profitability. So that's something to bear in mind. Now, things are not looking terrible in terms of the company. They still seem to be growing nicely and have some room to grow in terms of their net income and pretty much everything here. So they could be doing well. But we do want to see whether it makes any sense to be buying that. Even if we pay a little bit more, does it actually make any sense is the thing after it's being down again like 50%. So let's examine that. Right before we jump to our stock evaluation tool, I kind of like to take a look at insider trades and senator trades, which is a couple of modules here in our tool. Remember, you can become a patron and get full access to this tool. You can find links in the description box below the video. And you will see here that I'm looking at some purchases, and I do love to see purchases. Purchases mean, when you see a P here, the green one, it means that somebody is actually buying with their own money. And you can see here that somebody actually spent money to buy, although they didn't buy a lot. I'm looking at here, it looks like they bought like 20 shares or something of that sort. So yeah, they didn't buy a lot, but yeah, they still bought some. Now, in terms of the last 6 months and the last 3 months, it's basically probably the same sale. We can kind of see that here. In terms of a per-view type purchase, we'll see that this has been the only purchase here in the last 6 months pretty much. But okay, in terms of sales, the next thing that we want to see, it's always important to take a look at whether too many securities were transacted, especially ones that people were holding for a long period of time, and it's a large percentage of their total holding. So if somebody's holding 50,000 shares, this is the amount of shares securities owned. So if somebody is holding 55,000 and they are selling 40,000, that's significant. That's very significant, and especially if they are a CFO, a chief financial officer, which could be either CFO or chief revenue officer, financial officer, something of that sort. You kind of want to see what they are doing with their stock here. Now, in some situations, you will see that they actually sell out of everything that they have. But then you kind of want to see what kind of stock they sold. Now, these, for instance, were awards. And you can kind of see that this person here and this person here, for example, they do sell out of these awards because it's part of their compensation. It's very, very normal. What you don't really want to see is them accumulating, like, let's just say 5 years of stock, for example, and then selling like almost like 80% or 90% of that. That would be weird. But if you do notice patterns that's like always the same, that they're selling a little bit of a similar amount, it's because it's like part of their compensation here, because that's what RSUs are, for instance, then you shouldn't be too worried about this one. Things overall are looking normal here. I'm not really seeing something that is super out of the ordinary, maybe apart from some of these transactions over here, for example, which may be a little bit weird, but I think this has to be with the conversion of derivative securities here, pretty much. So these are options. Okay, so nothing really interesting here in terms of a potential sell or a buy, apart from the fact that somebody did buy a little bit here, but just a little bit. In terms of the senators, another interesting thing here, I'm noticing a couple of senators here buying, Josh Gorheimer and Carper Thomas over here. They did buy a little bit, but you'll see that this is a small lot. These are filed in a way that we don't know the exact amount, so there is pretty much a range always. but they did buy a little bit, adding to their portfolio. And generally speaking, senators don't do that with every stock. So they do have to file, and we do know that they actually purchased, the latest ones have been purchases instead of sales here. So interesting to see, at least take a look at that. Now, in terms of our stock evaluation tool, is it worth a buy here? Now, take a look at this revenue growth. It's been tremendous for the company, and we are looking at great, tremendous growth for the next few years. So I'm going to go with that. I'm going to go 50, 60, and let's just go 80 here. I'm going to go completely aggressive here, see what we're getting out of this. In terms of net income margins, though, the company is not profitable. We know that. I mean, the company is not really making money. So we have to assume marginal profitability, that at some point the company will become marginally profitable. And when they become profitable, they could be actually pretty profitable, being a software company. So they could actually be growing the net income much more than what we're going to use here. So I'm going to go 3, 5, and 7 to begin with. And again, remember that through the years, as they achieve profitability, they better their margins. This could be a much, much higher margin company. And this is one of the reasons I'm pretty sure that why Buffett would actually consider this kind of a company here. Okay, so in terms of the free cash flow and the margins, again, we cannot make a very positive correlation here for sure, because the company is paying tons in free cash flow compensation, in stock-based compensation to employees, and their net income hasn't been the best, of course. And so we will go with a typical one, 80, 90, and 100, which is a percentage of the net income margin pretty much. Annual return of 13% is what we're going to ask for. And I hit calculate here, and let's see what we're getting. So we are seeing that for these kinds of numbers, even at this insane revenue growth, this is an expensive company right now. So what kind of net income margins would make sense for this? If we had, let's say, 20, 25, and 30, which could be the case eventually for a software company of this sort, even then we are looking at the current price that is still elevated. So based on what I'm seeing right now, even though I'm pretty sure a lot of people like this company, they think there is some great future ahead of them, because it became a sensation and a lot of people, pretty much bought this one because of Warren Buffett and everything. It has grown a ton, and I think it's pretty expensive over here. Now, it has been even more expensive, but for me to own this one, it would have to be much, much lower, because there is risk here. There is risk that the company won't be doing well in the next few years, and they could stay stagnant. And if you take a look at the max as well. Now, if you could buy it here, like at $113, $13 back in June, pretty much, which is like 2 months ago, then it may have been a little bit better. But right now, as it's getting higher, 190 is a little bit too steep for me. So I just can't see myself entering this one, even though it could run for a little while. It's just too expensive for me to hold for a long-term trade. Now, will this company become an amazing company in the future? We don't know, but it's still expensive for what it is right now. So I'll have to see some profitability here. I have to see something going on, or a much, much cheaper price in order for me to risk it a little bit, risk it for the biscuit. So thank you for watching. Let me know what you think about Snowflake, guys. I'd love to hear your opinion. And remember to like and subscribe. And I'll see you in the very next video. Bye-bye for now. See you soon.